Welcome back to the channel, providing all of your dividend investing needs. Today we're going to be talking about two brand new funds that were just created that I think take a rather novel approach to investing. Created by the team at Subversive Capital, these funds are stock ticker NANC and KRUZ, NANC and KRUZ. Essentially, it is a collection of stocks that are owned by members of Congress. Let me briefly play a short video from Subversive Capital themselves that explains these two funds in better detail.
Every day, members of the United States Congress trade stocks in public companies. With extensive access to information and influence, the potential for abuse of their position is profound, especially where their congressional work intersects with policy. The US is the only democracy in the world where office holders are allowed to do it. The only catch is that they must report their holdings. So why not take our cues from them? With the help of our data provider, Unusual Whales, Subversive's new congressional trading ETFs invest in the securities that members of Congress and their spouses choose to put their own money in. NANC tracks the trades of Democratic members, and KRUZ tracks Republican members. Pick a side, hold one and short the other, or collect both. Join us in trading alongside members of Congress.
It's no surprise that many politicians enter Congress broke, but walk away multimillionaires at the end of their terms. One of the reasons for this is because of their insider information and being able to pass legislation that favors particular economic sectors or even individual companies, taking all of the guesswork out of investing. So let's jump over and look at the breakdowns of both of these funds and see if there's any information that we can learn to invest like the politicians do. Now, right off the bat, as these are both brand new funds, there is no historical data to pull from in terms of overall performance trends, and neither of these funds pay a dividend yet, since, once again, they are brand new. However, since many of the holdings inside the funds do pay a dividend, it's only a matter of time before a dividend payout for the fund itself is announced. So let's start off with the fund following Democratic lawmakers, stock ticker NANC. Here we see that their primary focus is overwhelmingly in the technology sector, clocking in at a whopping 34% of the total fund. Behind that, we see consumer cyclical products at 16%, communications at 12%, and the financial sector hovering around 10%. Now, if we look down below, we see that the fund comprises a total of nearly 800 companies, with the top 10 holdings listed. These top 10 holding companies comprise nearly 40% of the total portfolio. And that's the first thing that really jumps out to me as being interesting, because the fund is very lopsided in its investing strategy. If we combine the technology and communications sector, which in and of itself is usually very high-tech driven with companies providing services such as 5G, by combining these two categories, they make up nearly 46% of the total fund. Not only are their sectors lopsided, but the individual holdings are too. Having nearly 800 total companies, the few holdings at the top make up the lion's share of the total fund. Companies like Microsoft at 7.5%, Amazon, Apple, Alphabet, which is the Google company. Now, these are all pretty common blue chip stocks, which isn't necessarily surprising, but their massive weights within the fund is surprising. These four stocks alone account for nearly 25% of the total fund. As for the rest of the funds comprising the top 10, they are relatively well known and established companies, and there aren't necessarily very many surprises. The one stock that did sort of stand out to me was Disney, coming in at number 7, comprising nearly 2.5% of the total fund. While Disney itself is a fairly common stock pick in many investors' portfolios, however, what struck me as odd about the pick in this particular situation was the fund as a whole and looking at the other 9 holdings in the top 10. And based on these other holdings, Disney just seemed like an odd choice considering the general theme of the fund itself. Maybe they just like the stock. Maybe they saw it as a good way to capitalize on the normalization of travel activities again. Or maybe they were just showing support for a company that is often targeted by their Republican counterparts. Or maybe there's more going on behind the scenes. The last thing I'll say about this fund is that a little bit strange that the fund is so heavily centered around technology. While tech has historically been a sound investment, the sector as a whole does tend to struggle during periods of economic uncertainty and higher interest rates that we are currently experiencing. Tech stocks typically pay little or no dividends and rely much on future growth. However, during economic uncertainty, that means that future growth is also uncertain. As such, investors often shy away from tech stocks and invest in more stable, income-producing activities until the economy settles. This could be an indication that Democrats believe that the economic conditions will improve and interest rates begin to slowly retreat sooner rather than later. Now, before we transition to the Republican side, I would just like to point out that for the Democrats, energy is one of the lowest stock sectors, coming in at only 1.5%. So now let's transition to KRUZ, the Republican-held companies. Here we see a vastly different picture being painted. Here, energy stocks take the number one spot overall, clocking in at nearly 19%. The fund as a whole is a lot more balanced than the Democratic fund, with many other individual sectors being weighted fairly close to each other. Technology, financials, industrials, healthcare, consumer cyclical, they're all relatively balanced with regards to each other, as opposed to the Democratic fund that was extremely focused on tech. If we look below at the total holdings, you will see 533 total assets, with the top 10 holdings making up only 20% of the total fund. This once again demonstrates a more diversified composition. As you will recall, the Democratic funds, the top 10 holdings made up a whopping 40%, or nearly double the weight of the Republican top 10 funds. While the Democratic list of the top 10 was comprised of many household names, many companies on the Republican side you have likely never heard of. The top 3 companies are all energy midstream companies providing things like piping, refining, transportation, and distribution of oil and natural gas products. In fact, of the top 10 companies, it is likely that you've only ever heard of 3 of them: the petrochemical Dow Inc., Shell Oil Company, and tobacco company Philip Morris. Since many of these are not blue chip stocks, it seems evident that people are trying to more actively use their knowledge to outsmart the system for financial gain. A few stocks that stood out to me were options such as Las Vegas Sands Corp., which operates luxury resorts and casinos. Obviously operating out of Las Vegas, but surprisingly many of their casinos are located in Asia. Since Asian markets responded and reopened significantly slower than the US following the recent pandemic, companies like Sands were able to take advantage of that delayed reopening and heavily profit. As you can see, the overall returns since June of last year are pretty phenomenal, nearly doubling in price. Another pick that stood out to me was United Therapeutics Corp. At 1.5% weight. While there are a lot of health and biotech companies out there to choose from, this one in particular has done very well over the years. From a low of around $5 in the early 2000s, this stock has consistently climbed over the years, topping out at over $250. That's an annual compound growth rate of roughly 17 or 18% over a 20-year period, significantly outpacing the broad market, which tends to average closer to 10% annually. United Therapeutics was the first publicly traded biotech to convert its corporate structure to a PBC, or a public benefit corporation. Effectively, what this means is that the company decisions are not purely financially motivated as they are with a traditional company. Instead, as a PBC, the company has a duty and an obligation to consider the best interests of the patients themselves. In addition, the company has instituted a self-imposed livable minimum wage, offering employees a minimum of $75,000 annually. One of United Therapeutics' research programs involves growing and developing organs in host bodies for transplant to humans with critical organ failure. In January of 2022, They were successfully able to transplant a genetically modified pig heart into a human. While technologies such as this still have a long ways to go before becoming mainstream, the possibilities for such a technology provide for a considerable financial windfall. In summary, by looking at what our policymakers are investing in, we can hope to gather insights about what the future likely holds. If anything about these two funds stuck out in particular to you, leave a comment down below with your thoughts. And if you enjoyed this video, consider subscribing, and as always, I'll see you all again next time. Thanks.